The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the June 5th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got a slightly mixed bag out there. That mix is coming from the transports, which are up 47 points. Otherwise, the other U.S. indices are trading to the upside. Dow's up 52, S&P 11, NASDAQ 192, Russell's up 2 points. Semis are up 37 points out there. If we take a look at silver, which I've got up on my screen here, silver negated a TD9 count top. It has formed an A to B equals CD pattern. The initial price projection on this would get us up towards the $38 level. If we open up the weekly time frame chart, what needs to happen in order for silver to do that? Well, let's go find out. Silver has, on a weekly basis, a TD9 count and Rhodes Momentum Indicator top that went ahead and formed at the high on October 25th out there. And that high is 36.10. So that's the high that price must take out in order to get up to that A to B equals CD pattern that we were taking a look at on the daily time frame for silver. What we can also see here on silver is you can see a consolidation pattern. So let's go ahead and draw that in. If price breaks through the consolidation pattern, that will give you a measured move. And really the consolidation pattern should be about right there to right there. So if we just simply go ahead, this is a weekly chart. If we just simply move this to the top of the consolidation, right now it's showing that it looks like it is broken through. That would give you a price objective of 43.73. Now, that's coming from the weekly time frame chart. The very first thing that needs to take place, though, is price has got to take out that high from October 25th. This is the July contract that we're looking at, and that high is $36.10. So that's what's going on with silver. Even though I've given you an A to B equals CD price projection of $38, it's still important for us to understand where is resistance. Now, from a short-term trader standpoint, we have a 30-minute Rhodes Momentum Indicator top with price consolidated with inside its profile. And it's made the run today between support at 35.74 and resistance at 36.15. Those are the two levels to watch from an intraday standpoint to get a feel for what's going on there. If we take a look at Goldilocks, put this up on our screen here. We're using the August contract out here. In the case of gold, let's first let this populate here. Hey, how about that? How about that Stanley Cup game number 1? That was a great game. I didn't necessarily, although, hey, I'll take an extra period. Sleep-wise, I didn't necessarily want the game running until about midnight out there. But it was a great game. Edmonton won. You could see we're at the end of the first period of overtime, and we took Florida took a a stupid penalty, and they were tired, and you could just see that they were likely going to lose, which they in fact did. But it was a great first game. So with regard to gold, we've also got an A to B equals CD pattern out here, and as long as price can remain above the B point, which is at 33.95.30, we're at 33.95 even Steven right now. If it can remain above that, we've got an A to B equals CD pattern here that would basically take us back to its highs out there. So in order for gold to break out, you've got a TD9 count top on the weekly time frame chart. I'll just simply open up this chart here, and what we can see is that in order for gold to really get in full bust out breakout mode, we need to close above the high of 35.39.30. That is on the August contract. That is the weekly TD9 count top. We've got a daily Rhodes Momentum Indicator top. We've got a monthly TD9 count top. Now you can't take a look at this. I've got this the August contract we're using. It's not giving you enough data to do the proper count. If I put up the continuous, you would see we also are in a TD9 count top again on a monthly basis. So gold continues to suggest a couple of different things. One, right now it's suggesting caution because of those tops that are out there. If you look at the 30-minute time frame chart, just so you can see how these patterns work, you really should learn these patterns. They're not that complicated. Here, if you take a look at the 30-minute time frame chart, when did silver top this morning at 7:30? Well, it topped with a TD9 count pattern out there. Now, I know there's one trader inside the Tiger's Den that uses these TD9s. I know there's more than one trader who actually put on a short trade for gold out there. Pretty sure that that individual is looking at the TD9s. Now, what that individual should also be doing is taking a look at price getting back to its breakout level. It doesn't have a bottom pattern, but the breakout level, which is the low of the TD9 count, is at 33.8870. So if we take a look at what transpired as we were coming on the air, price was pushing down to 33.8870. It actually got down to a low of 33.8710, but by the time that 30-minute bar was over, it closed back above that area. So has gold bottomed on a 30-minute time frame chart? The answer to that question is yes. There's also a TD9 count bottom pattern on the 30-minute time frame chart. If price were to close below that being 33.8450, well, then the answer to that question would be no, or basically the bottom getting back to the breakout level failed. But in essence, we should have it should be in the bottom right now, where price at least rallies up towards 34.0360 to 34.0560 out there, and then we have to assess what goes on at that point in time. So that's what's going on with Goldilocks. Let's take a look at light sweet crude. Let's kind of stick with these charts here. There aren't really a whole lot of requests. We'll take a look at the equity markets very shortly. If we take a look at light sweet crude on the daily time frame, what we see here is that price is dealing with profile resistance. Profile resistance for the daily time frame is up at 63.44. If price can close above that, we're likely to head up to 69.42 to 72.24. That comes from the weekly time frame chart. If we take a look at these profiles, you've heard me share this with you so many times, and that is that we have a bullish structured profile. And if price is able to close above a bullish structured profile on a weekly basis, which it has for the last two of the last three trading weeks, we should make a move up to 69.42. Well, why haven't we, Steve-O? Because that red oscillator and change line contained price at week's end. We are trading above it now. Right now, that number is printed at 61.84. Therefore, if we get a close above that red oscillator and change line on a weekly basis, combined with closing above the top of the daily profile, we should make a run for that 69.42. However, there is a pit stop, and that pit stop is at 64.89. That is the bottom of the monthly profile. You can see on a monthly basis, so this shows you, when we take a look at what was it we were looking at gold before. Here we can see that price pulled back on a monthly basis for light sweet crude right to its breakout level, found a bottom there. That was at 57.30. So that in essence is how the TD9 system works. And it can work for you. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We've got a couple of requests. Let's go ahead and get through those. The first one is ticker symbol CAVA, CAVA. This is for SATP. This came in yesterday. My apology for not getting to this. CAVA SAT has got a bottom. It looks like it's bottomed out. It's got a bottom pattern on the daily, on the weekly, and on the monthly. Let's start with the monthly chart out here. The monthly chart forms a TD9 count top. That actual top forms the week or the month of October of 2024. Out there. That top was tested for a couple of months and held, and now what we see is that a profile formed back in February 2025. Price moved down, tested and rejected its bullish structured profile zone. That was getting back to the 76.78 to 87.41 level. So that would be is there a bottom pattern? No, but getting back to support can be a bottom pattern. So the answer to that is yes. We look at the weekly time frame chart. It's got a by the D point bottom that formed with that nice bullish engulfing candle the week of April 11th. Obviously, April 7th being the day that the daily formed a Rhodes Momentum Indicator bottom pattern as well. Now, prices pulled back on the daily time frame. It formed a TD9 count bottom pattern on May the 30th. It did it with a bullish hammer candle. We also have a hammer candle on the monthly time frame chart. What price has done for the last several days is rally, but it's rallied right up into where counter trend moves could or would come to an end, which is the bottom of its profile, really between the bottom and the center here, 82.88 to 84.21. So not until you see a close above really 84.21 will this be out of the woods. But it's an easy trade from the standpoint of a setup. Your stop would be a close below that bullish hammer candle on the daily time frame. That would be 78.88. So and you're at 81.50. So if you're looking at on the weekly time frame chart, price right now is pulling back and testing the bottom of its bullish structured buy zone there. So if you're looking to get into CAVA, really you've got that signal. Be careful, but it's like any trade out there. No idea whether it will work or not, but you got a daily, weekly, and a monthly bottom pattern out there, so it's likely worth the risk. And just make sure that your close is below the low of April the 30th. I'm sorry, May the 30th out there. So that's on Kava. Sat, you also wanted to take a look at Okta, OKTA out here. So let's go pull that chart up on our screen, see what it is doing. So OKTA is trading. Now, this actually formed a TD9 count bottom pattern. It completed that pattern yesterday. It formed it on bar number 8. That was a couple of days ago. That was on June the 2nd out there. Price is now inside a bullish structured daily profile. The price can close above 107.22. It ought to make its way up to the 112.30 level, the top of that daily profile. On a weekly basis, Okta has pulled back into its buy zone. That tells us that any close below 99.82 would suggest that this is going to head lower. The daily time frame chart suggests that any close below 102.15 and price would head lower. However, the head lower there would have to be 99.82, being the bottom of that buy zone on that weekly time frame. So in this case here, if you were to put on a buy trade out there, your stop needs to be below 99.82. Now, if you take the last 10 days average true range, multiply that times 1.618, that in essence becomes your stop. Probably that less where we're trading right now gets you below the 99.82. I don't know for sure because I don't have that tool on my screen at this moment in time, but that's what I see when I take a look at OKTA on the monthly time frame out here. We had a sell the D point top, price pulled back, tested the top of its profile. Looks pretty good here to Stevie. So that's OKTA, and Sat, thanks for waiting an extra day on that. Duncan Steve writes in, wants to take a look at really two things. Wants to take a look at Amazon as well as on the semiconductor index, what its seasonal pattern looks like. So let's go to the seasonal pattern first. Here is the semiconductor index, Steve-O, over the last 31 years. The red vertical line is where we're at right now. This suggests that the semiconductor index, if it was following this analog, should form at least a short-term top basically right now. That short-term top should last into about June the 27th and then rally up into the July 15 time frame, then pull back. That's really that July 15 time frame becomes in essence the top on a seasonal basis. Not saying it's going to follow this analog, but it would top out around July 15th and then not bottom until the middle of October 10th or so, or maybe even as late as October the 29th out there. That is a seasonal pattern over the last 31 years. 31 years doesn't really allow us to get a ton of post-election cycles out here, but we can put that chart in as well. That actually gives us 8 touch points, but really I'd have to take off 2025, so it's really only 7 touch points out there. But even on this seasonal pattern here, Steve-O, this is suggesting that we should see a short-term top would form around June 9th, so today is the 5th. So what this is telling us about the semiconductor index from a seasonal pattern, whether it follows just a traditional seasonal pattern or if it follows the presidential post-election seasonal pattern, that we should see a top between today and June the 9th, June the 10th out there, which would basically be what? Today's the 5th, so the early part of next week. Is that how that would work? I would think so. So what we should do, though, is instead of this chart, we'll come back to Amazon. Let's go take a look at the SOX chart out here. So let's pull that up since we were just taking a look at the seasonal patterns. And on the SOX, what do we see? Well, first, the daily time frame negated a TD9 count top yesterday. So that is bullish and should continue to rally. However, what we see here is that a Rhodes momentum indicator signal has been triggered. Therefore, if a bearish reversal candle forms, that will confirm a Rhodes momentum indicator top. Now, for the semiconductor index, the first level of support would be at the 49.51 level or thereabouts. That's its oscillator and change line. On a weekly time frame, the weekly time frame is saying bottom schmottom. Yeah, I think that's what it's saying. It's saying I want to make a move up to 53.6632. It's TD9 count breakdown resistance. However, in order for that to take place tomorrow, we need to see the SOX close above its green oscillator and change line. Turns out that's at 50.92. We're trading at 50.88. So that factor that I gave to you, or that projection I gave to you on the weekly time frame, does not come into play until we see the monthly chart begin to close above 50.9213. Now, the month is not, we just started the month. So how are we going to know? Well, just take it on an increment by increment basis. Take it on a weekly basis. Do we close above the oscillator and change line tomorrow? If we don't, it's a caution sign out here. We've been trading higher for the last 3 trading days. A 4-bar move is typical. The last rally, we did actually 6 bars to the upside, but more usual to do 4 bars to the upside, maybe 2 bars to the downside out here. So we could be getting ready for that short-term top. Is it more than just that? Well, we can't rely upon the weekly for that signal. We'd have to really rely upon the daily and the monthly time frame chart. So, Steve-O, I hope that helps you out with regard to the seasonal pattern for the stocks, as well as what these charts are communicating to you and I. Now, let's go take a look at Amazon. AMZN is trading out at $2.12, $212 even Steven. If we take a look at the daily time frame, price is simply consolidating with inside its daily profile. It has support at 199.35. It has resistance between 208.64 and 214.84. And you've got resistance at 214.01. That's its daily TD9 count breakdown resistance level. We come back to this break. We're going to finish taking a look at Amazon. We'll take a look at DSVSF for Rye, and of course I'd love to take a look at more. Well, Bob in Spokane wants to take at Oracle, so we'll do that too. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're looking at the charts here for Amazon. This for one of our dinners out there. We were taking a look at the daily chart. In essence, there we're talking about a consolidation with inside its profile. We've identified resistance levels. The last piece of information for the daily time frame that I'll share with you is today is going to become bar number 8 of a TD9 count pattern. It looks like we're going to get a TD9 count top that forms between today and Monday. It's doing it right at that TD9 count breakdown resistance level. That should prepare us for at least a 2-day pullback. Price target could be as low as 199.35 out there. You got to take things one step at a time. The first step would be 208.64. The second step would be 207 and change, and the third step 199.35. The weekly chart looks just fine. Nothing wrong with it as I see. Price is moving into a swing point for May 16th. Volume there, 277 million shares so far for the week. We are at 113. So price is pushing into a swing point with light volume. The monthly chart looks good. Price is trading above its green oscillator and change line and consolidating with inside its profile. This is a bullish structured profile, and this suggests that over time what Amazon wants to do is get back up to the 242.52 level out there. So in short, Amazon likely to form some type of short-term top between today and Monday, get some type of retracement or pullback, maybe towards the 202, 199 level before it resumes its move to the upside out there. So that's what I see with Amazon. Dunk, hope that helps you out. Bob in Spokane wants to take a look at Oracle. ORCL is the ticker symbol there. We take a look at Oracle. It's going to form bar number 8 today on the daily time frame. That says we could get a top in Oracle between today and Monday. Looks like this TD9 count top will form at or about a TD9 count breakdown level, that being 176.88 out there. That should then lead to a retracement. That retracement ought to take us back to first, the oscillator and change line. Currently at 166.52, drop the cents. Below that, 163.41 is the top of the profile, 159.87, and then 156.33, the center and the bottom. On a weekly basis, things look very good here. Things are suggesting that we should move up to 182.24. So perhaps the daily time frame is just simply a little bit of a pause and a timeout. I can see if stocks move back for a couple of days, everybody's going to be screaming that the world's just come to an end or something to do with tariffs. But of course, you and I, we looked at tariffs. We went back into the 1900s. We saw it's tariffs, schmariffs. The market did not, the tariffs did not stop moving into the 1929 high. Not even close. The same thing likely to unfold this time around, too. So the target to the upside on Oracle for its weekly basis, 182.24. Now, there's no guarantee that the TD9 count top will form. There's no guarantee that even if it does form, that it will succeed. And if it fails, then that's going to get to that 182.24 for sure. On a monthly time frame, price had a TD9 count top. No, it did not have a Rhodes Momentum Indicator top. What does price do? Pulls back to support. Where was support? Bottom of its profile, 122.12. Folks, you need to get access to these profiles. Now, look, if you don't want to purchase the profiles, put them on your system, subscribe to Mastering Probability. Oracle's probably on there. I've probably given you the daily, the weekly, monthly. I'm giving you support areas out there, support and resistance levels. In this case here, Oracle on that monthly time frame is trading above profile resistance, trading above the top of its oscillator and change line at 166.88. That says it wants to get all the way back to those all-time highs. So I would say Oracle looks much like the market. We're getting ready perhaps for a short-term pullback. Maybe it's a 2 to 4 day pullback out there. Maybe it's a 2-week pullback out there. Don't know which just yet, and we'll monitor it one thing at a time. But what these charts are telling us that Oracle is not done running to the upside out there. So that's what I see when we take a look at those Oracle charts, Bob. Hope that helps you out. And let's go to our next request. Coming from Dennis just down the street in West Palm Beach. And Dennis wants to take a look at, I don't know what this is, but let's pull up the charts here first. Is that where I put it? I did. Ticker symbol is DSVSF. And DSVSF has been a rocket ship for the last 6 months out there. This thing has just simply blasted from 46 cents to $2.64. That's one heck of a move. Monthly chart is in bar number 7, so I'm not seeing any kind of a top there. Let me just kind of scrunch the chart a little bit. We're even at new all-time highs out here, so that looks good. The weekly time frame chart negated the Rhodes Momentum Indicator top a couple of weeks ago. It would need a bearish reversal candle to confirm a top. I will share with you that this is week number 3 to the upside. Last week we had a 2-week retracement after a 2-bar move to the upside. Before that, we had a 1-bar retracement after a 3-bar move to the upside. So the daily time frame, is this telling us it's getting ready to pull back? Well, the answer to that question is no, not as we speak. Price negated a TD9 count topping pattern. It did it. Looks like it did that on Friday. No, it did that on Monday. It still have a Rhodes Momentum Indicator signal, but that requires a bearish reversal candle. So you're bullish on DSVSF for the daily time frame, weekly time frame, monthly time frame. I hope that provided you with the information that you were looking for there, Dennis. If not, let me know. Let's go take a look at XPEV. This for GTE, who wrote in, and I believe that is going to be right here. XPEV, such a tough chart to really look at on a daily time frame because of the currency conversion, and that's why it's got all those gaps. See, those gaps are basically meaningless. What's not meaningless is the fact that prices trade above both profile resistance and a oscillator and change line. As long as price remains above 2003, that is the excuse me. That is where did it come? 2003, that is the daily oscillator and change line. It should continue to rally. Rally to where? Well, 2111-ish is the weekly oscillator and change line. So that will become your resistance point on any rally. If price can close above that line is going to change as price moves higher. Then you should get a move up to 2467. Things on the monthly chart look good out here. So that's XPEV. Key here is holding $20.03. So that is all the requests that I am aware of at this moment in time. I will check the email system here, just see if anything else has popped in. And the answer to that question is no. Now, we didn't really take a look at the equity charts, I don't believe. So let's go take a look at the daily equity futures out here. And if I did go through this, I apologize for going through it again. Here, if we take a look at the daily time frame chart, you'll see, courtesy of Basil Chapman, you will see wave number 7, letter G. That needs a lower high to confirm out there. So that's one topping pattern that is in place. Price will negate its the top of its profile with a close above 59.83. That will be a bullish outcome. There's a Rhodes Momentum Indicator signal. That requires a bearish reversal candle to confirm a top. Bar number 8 and wave number 7 on the NQ chart out there. Again, same pattern there. Needs a lower high to confirm wave number 7. Needs a bearish reversal candle to confirm a Rhodes Momentum Indicator top. But today's bar number 8. Today could be a high, or it could be the high tomorrow or on Monday. The Dow and the Russell 2000, both just consolidating with inside profiles. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The next instrument we're going to take a look at is ticker symbol AGEN. And you'll see on the daily time frame that it has it's attained. I can't say completed, it's attained its 1-to-1 price objective of its A to B equals CD pattern to the upside. If a bearish reversal candle were to form today, right now we've got a bear sash candle and a bearish engulfing candle. If a bearish reversal candle were to form today, that tells us we have a sell the D point top. That would then suggest that price would pull back to the first level, being its oscillator and change line, currently at about 444. Below that, we'd be looking at 369, the top of its daily profile, and below that, the two other profile levels, 332 and 295. Now, at the same time, we may get a sell the D point top. Again, may not. It's only 11:43. So, Dan, you're going to have to see what type of candle session we have at day's end. But it would make sense that we get a sell the D point top while the weekly is testing TD9 count breakdown resistance at 581. It's also bar number 8 here. So bar number 8 says you could get a top that forms between this week and the next two. Now, that stretches things out quite a bit, but that's something for you to pay attention to. The monthly chart says I'm just getting ready to start my rally. It formed a TD9 count bottom pattern that completed 2 months ago. We're now back inside its profile at 422. Next resistance level for it is at $7.66. But the daily right now at 11:43 has given us a signal of a sell the D point top that ties right out into the weekly, running into resistance at its TD9 count breakdown area. So hope that helps you out with regard to what we see with AGEN. We're going to go take a look at ticker symbol GSM, see what that is doing out here. GSM is, hopefully it's right here. Yep, there we go. GSM formed a beautiful TD9 count bottom pattern a couple of weeks ago, and boy, it just simply rallied. In 2 days, it made its way all the way back to the highs, went from $3 to basically $4.10. So what is it doing now? Well, what it's doing now is it is trading above profile and oscillator and change line resistance. That says that it wants to rally. Well, it's trading into the swing point that formed on May the 12th. That had volume of 2 million shares. Yesterday, we got into it with, well, I don't know. We got into it with 1 million shares. Today, in a little over 2 hours of trading, 555. So we're moving into that swing point with light volume. Nonetheless, as long as price remains inside that swing point, we should go target the high there being $4.10. The other swing point, let me pull this back just a tad further. Well, there's a bunch of them. Wow. We'll just stick with the first one that we've come up with at this stage here, which is prices trading higher, doing it with light volume. Your bar number 3 to the upside. Last time we had a pullback was after bar number 3, so that just says, okay, be careful. Monthly time frame chart shows that price is consolidating with inside its profile. I will assume, there's a buy the D point bottom pattern that forms with this bull sash candle back on the week of May the 9th. So nothing more than a consolidation here. Monthly has a TD9 count bottom pattern that has completed. In order for GSM to really get its mojo to the upside, Dan, what you need to see price do is close above on a monthly basis, certainly trade above its red oscillator and change line. That is printed at 397. So let's call it $4 even, Steven. No, let's call it 416. If GSM can close above 416, that is its weekly profile. This should just take off to the upside. Upside being 507 to 562. So that's what we see when we take a look at GSM. Duncan inside the Tigers Den wants to look at CRNC. So let's go pull that chart up, see what we've got out there. CRNC on a daily basis is consolidating with inside its profile. That range, 887 at support, 1027 at resistance. 1027 was tested 2 days ago. It was tested a couple weeks ago. You can see that is your key level of resistance. So, Steve-O, job number 1 for us is understanding where support and resistance is. Well, resistance is clear as can be, $10.27. So if this ever starts trading above that, you're above resistance and you should head higher. In fact, it would generate an A to B equals CD pattern to the upside. If price were able to close above the high from May 14th, that high is at 1050. Now, price is back inside that daily bear structured profile. This is 2 days to the downside. If this is in a real bullish mode out here, Dunk, this today should be the bottom. Not that we have a bottom pattern, but understanding its stance steps, its stance moves means we don't step on its feet. Right? And so this has done several 2-day pullbacks. I see a 3-day pullback out there as well. So this should form some type of bottom either today or tomorrow out there. On a weekly time frame, beautiful TD9 count bottom pattern, price consolidating with inside its profile. That's between 685 and 1050. And on the monthly time frame, we've got a TD9 count bottom, price trade above profile resistance out there. The monthly is not getting in the way of anything. The only thing getting in the way of a rally, really, quite frankly, at this stage here, are the profile levels, making that 1027, 1050 your real key areas out there. So I hope that helps you out there, Dunk. Thanks for your request. Let's go to the next request, which is back to GTE. Wants to take a look at FXI. FXI is one of the large caps for China, I believe. And what is it doing? Well, we can't use the daily chart gaps because that's currency conversions out there, so they're irrelevant. What's not irrelevant is the fact that prices trade above profile resistance at 3509 and its oscillator and change line at 3601. This is likely to rally further. I say likely because today has triggered bar number 7 of a TD9 count. Now that needs a lower high in order to confirm that top. If we do get that top, price should pull back towards 3601, maybe even 3509. If we look at the weekly time frame chart, price is trading into its sell zone. This says put on your seatbelt. Why? Because the ride could get bumpy. The bumpy air is between 3647 and 3723. On a monthly basis, things look mighty fine. Don't see any kind of a top. I take that back. It has a sell the D point top. In order for that to get negated, you got to get a close above the month of March of 2025. That high out there is 3873. But that's the good news. If you get above 3873, that's only a consolation prize because what it has to do is get above 3978. 3978 is the monthly TD9 count breakdown resistance area. So that's what we see. FXI. Daily wave number 7, getting ready to set up a short-term top. Weekly into the sell zone out there, and monthly is trading into. It looks good, but it has to clear its sell the D point top. Really, it has to clear 3978. So GTE, I hope that helps you out. I do not see any other requests. So we've gone through all requests inside the Tigers Den, all requests that I have received by email. Just making sure. Yeah. And so now what do we want to go take a look at in the next 30 seconds out here? Great question. Let's look at the New York Stock Exchange, the Advanced Decline Oscillator. Are we back? We're above zero out here at 20.99. This is telling us that buyers are the ones that have control. However, there actually was a sell the D point top that formed inside the New York Stock Exchange yesterday. It did it with that bearish shooting star candle. Now, what price is also doing, though, it's trading above its green oscillator and change line. So its sell the D point top is somewhat neutralized. It becomes really neutral if we see it close above 20.008.76. It'll negate that signal. It suggests that we head higher. On the spot VIX index, you are in bar number 7 today. You could form a TD9 count bottom pattern between tomorrow and Tuesday of next week. You still got to get below today's low, whatever that ends up being. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. I've been through all the requests out here. Let's just dial down for the next couple of minutes, look at some of the intraday charts here for the futures, equity futures. Here we've got the ES Mini charts up on our screen. The only topping pattern at this moment in time comes from the 10-minute time frame chart. Tom's favorite. In another 6 minutes, this will complete a TD9 count top. Now, price is trading with inside its profile. What price should do is it should pull back to, at a minimum, test that oscillator and change line. It's currently at 59.94. The center of the box at 59.91. I think 59.91 is the more likely target. It's a bearish structured profile. That says if price were to close below 59.91, we likely see a move back to 59.67 or its breakout level at 59.58. That's, again, courtesy of that TD9 count pattern. To the upside, what are we watching? Well, the first thing you could watch is the TD9 count top. If price closed above 6,650, that should lead to a further rally. The next resistance point above that is going to be at the 60.1650 level. There are a number of that was the swing spike high that created a shooting star candle on the 15-minute time frame. That becomes your resistance level inside of the ES Mini. Let's go take the NQ charts up here. See how quickly we can get these to populate and provide you with some support or resistance or pattern level areas. Perhaps its 10-minute time frame chart also forming a TD9 count pattern. We'll know here momentarily. And the answer is yes. So in another 5 minutes, this TD9 count pattern will go ahead and complete, assuming that we don't rally and get above the current high of the pattern, which is 21,928.50, also happens to be the top of its profile. We should see a move back towards this oscillator and change line. 21,869 is that first level. If price gets below that, then you're looking at about 21,793. That's the only top that I see inside the NQ. Otherwise, all the other charts look hunky-dory. Folks, stay tuned for all the great programming. Thanks for joining me today on Terrific Thursday. I will look forward to seeing you on Fabulous and Fantastic Friday. Have a great day and be safe out there.